morning to one and all. Welcome to my YouTube channel. This is Narayan Rao Kovur. In this video, we will understand the remaining concepts of national income. So, national income is the total market value of all final goods and services produced in a country during a given period of time, usually one financial year. This is called national income. So, in other words, in general, a country's income is calculated by summing up the aggregate value of all the final goods and services produced in a country during one financial year is also called national income. Next, concepts of national income. Point number 7. NNP market price. NNP market price means net national product market price. So net national product market price is the market value of all final economic goods and services produced by normal residents within the domestic territory of a country, including net factor income from abroad during an accounting year, excluding depreciation. That means, we have to calculate gross national product. For gross national product, we add, we already included net factor income from abroad. So when we calculated gross national product and subtract depreciation, then we will get net national product at market price. So NNP market price is equal to GNP market price minus depreciation. Then you will get NNP market price. Next, another one is very important one. NNP factor cost or national income. So net national product at factor cost or national income. NNP factor cost is also called national income. So national income is the factor income accruing to the normal residents of the country during a year. This is called national income. So it is the sum of domestic factor income and the net factor income from abroad. It is also called national income. So, how to calculate national income? Total market value of all final goods and services produced in a country during a given period of time. So, usually one financial year is called national income. Next, NNP factor cost is equal to, that means national income is equal to factor income in domestic territory. Factor income in domestic territory plus net factor income from abroad, then we will get NNP factor cost, or NNP factor cost is equal to NDP factor cost plus net factor income from abroad, then you will get NNP factor cost. So, if NNP factor cost is greater than NDP factor cost, net factor income from abroad is positive. NNP factor cost less than NDP factor cost, net factor income from abroad is negative. NNP factor cost is equal to NDP factor cost, then net factor income from abroad is 0. Right. So this is the national income or net national product at a factor cost. Next, another one is 9th one, domestic income. So domestic income is categorized into two. Domestic income is categorized into two. One is income from domestic products accruing to public sector or government sector. That is one category. Second one is income from domestic products accruing to the private sector. This is the second category. So, next, another one is private income. Private income. What is the meaning of private income? Right. Private income is the measure of income, that is a factor income and a transfer income. So, private income is a measure of income, that is a factor income and a transfer income, which accrues to the private sector from all sources within and outside the country. This is from private sector from all sources because it is a private income. Private income is a measure of income, both factor income and transfer income, which accrues to the private sector from all the sources within the and outside the country. This is called private income. Private income can be calculated from three types, from three dimensions, from three ways. One is private income is equal to factor income net domestic product accruing to the private sector plus net factor income from abroad plus national debt interest plus current transfers from the government plus net transfers from the rest of the world. We add all these things, then you will get private income. Once again, private income is equal to factor income from net domestic product accruing to the private sector plus net factor income from abroad plus national debt interest plus current transfers from the government plus net transfers from the rest of the world. Then you will get private income. Second way, private income is equal to national income minus income from domestic product accruing to the government sector plus transfer payments. Transfer payments are scholarships, pensions, unemployment allowance, etc. So again, private income is equal to national income minus income from domestic product accruing to government sector or public sector plus transfer payments. Then you will get private income. Third method is private income is equal to personal income plus corporate tax plus undistributed profits. Then you will get private income. So, thank you. Like, share, subscribe, and comment.